Good afternoon, traders, and welcome to the Hot Stocks Outlook for February 16th, 2017. And boy, what an exciting month this has been throughout the S&P, the Dow, and obviously individual stocks throughout the marketplace. So there's been some very exciting trades, but as always, the most important thing is how are you managing your risks in the market? How are you making those decisions? And one of the best ways to do that is really leverage technology that's going to give you a big advantage in the market. Now, we're going to be looking at the VantagePoint Intermarket analysis software, but very important to understand, what's going on here? How does this software work? Well, it actually utilizes a type of artificial intelligence called neural networks, and they're able to scour huge amounts of data and figure out how other important markets are affecting and driving and influencing the markets that you're trading and putting your capital at risk in. And so, we've got a stock like Tesla, and really any stock, it's going to be driven by those big macro markets. Like, what is the S&P 500 doing? What is the dollar index, the gold, silver markets, these very important big sort of macro commodity markets. But what the technology is able to do is find a lot more of those subtle relationships that share very important relationships with that target market that you're trading, but you just simply wouldn't have the time or really the understanding as a human to be able to figure out these things. And that's really what we want to utilize this technology for. Now, the great benefit of this is that, these predictive indicators that you see against the chart here are very easy to interpret and incorporate into your trading style and approach, and have an extremely high level of accuracy here. So we're going to look at some stocks we've looked at before over the past several weeks, but also some new opportunities that have come through the software and indicated some new trends and opportunities. Now, here in Tesla Motors here, we have daily bars and candles as far as these red and green candlesticks representing the price data. And you can see we're going all the way back here to December, middle of December here. And this is why it's so important to have the right tools so that you really don't get emotional, don't sacrifice a position, and then watch it go up another 10, 15, 20% with you on the sidelines and not making money. Well, we had this crossover between these two moving averages, and let me explain exactly how this works. Now, the black line that you see on the chart there, that is a simple moving average, just a regular simple moving average. And what that does is really simply just summarize what's already occurred in the market. So one of the problems with relying on, just simple moving averages is that they really just summarize what's already occurred in a given market, and they only look at past prices, and they also only look at one market at a time, meaning they have no ability to understand, hey, what's going on in the S&P or the technology ETFs or the dollar index. And so against that price data, and on top of that black line that you see there, is VantagePoint's proprietary predicted moving average. And I can scroll this cursor over here, and we can see that for this value to be generated, the value of this blue line, it's analyzing those global market relationships and really forecasting future price so that traders can understand, look, has there been a trend change in a given market? So you can get in early on that trend change and understand, hey, now's the time to trade. That trend has just changed, and that's where the most opportunity is really to be had. Now, as long as that blue line remains above the black line, it's still forecasting the overall trend to remain up, but you do want to pay close attention to really the spread and separation between these two values, because what it's really telling you is it's really a comparison between that actual moving average and then a prediction of where prices are expected to go next. So if you have a lot of separation, there's a very strong trend in place. And if they're pinching close together, you know that that trend may be weakening and not quite as strong. Now, aside from the blue and the black line there, you're going to notice that we also have another indicator here at the very bottom of the screen. And this indicator is extremely accurate, and it's really a 2-day indicator. It's looking forward 2 trading periods ahead and letting you know, hey, over those next 48 hours, is there strength or weakness in the market, so that, again, you can make those better trading decisions, knowing that, hey, if the trend is up and there's going to be weakness over the next couple days, we'll wait for those dips, go ahead and buy more or adjust your position so that you can go ahead and minimize those risks and really maximize the gains that you can make in a given market here. So far, since that blue line has crossed above the black line, we've never really had the trend reverse. It's kept saying, look, stay long Tesla Motors here. The market's moved up about 47%. But, even someone who comes in and trades options, or if you're just buying the shares, a 47% increase is just a tremendous amount of money that you can make on a single opportunity just by simply understanding that, look, the trend is still up, maintain that position. Now, if you watch some previous videos going back to the end of January, I think it was here I first spoke about Tesla as far as one of the videos here, and you see how this works. That blue line remains above the black line, but you're getting some warning signs of some weakness over these 48-hour periods, and sure enough, the market trades sideways, but you certainly don't want to get out of your trade. The trend is still up, and you see once we get a little separation there, the neural index strongly up at a 1, market's moving up another 11 or 12% over just the next 7 trading days. So whether you're a day trader, whether you trade the shorter term weekly options, when you have a tool and can understand, hey, where these longer term trend and short term probabilities really favored, you can really make a lot of money managing those positions effectively, really making good trading decisions in line with your approach to the marketplace. Now, let's go ahead and move forward, look at some of these additional opportunities here. But it's the exact same logic. Once you've identified the trend and understand, hey, what's going on in the short term here, you can make those better trading decisions. Now, here we have Pulte Homes, a home builder, crossover all the way back here at the beginning of January, saying, look, the trend is up. Look to go ahead and buy call options, start taking those long positions in the market. And, since that crossover has occurred, we've certainly had a really nice rally in a lot of these home building stocks, and specifically here, Pulte. Even just 1,000 shares here, you've made, almost $3,000 on the way up. Again, if you trade options, that's where you want to go in and buy those option contracts, knowing that that trend has shifted. But what you don't want to do as a trader is really get, sidestepped by things like this, where you get this dip in the market. A lot of people, I'm sure, having their stops getting hit, selling their position out of the marketplace. But you really understand that, look, there's going to be some short-term weakness. That blue line is still above the black line, and you certainly don't want to get out of the market over those couple days, because sure enough, the market reverses, your neural index comes up to a 1, and this trend is ready to start moving higher. And this is one of the big things, is that when you have a tool like VantagePoint and can understand, hey, the trend is still up, stay calm, don't get all emotional here. When the market starts doing things like this, you're already on board. If you don't have the tools and you're coming in late and trying to chase these things, that's when the emotions can really get and interfere with your overall trading strategy. And then you end up missing this 14% rally on a nice cheap stock, about $18 a share since that trend reversed there. Moving forward, another stock we've covered is, a lot of the weakness in things like Exxon, here in Hess, Transocean, a lot of these, crude oil and oil service companies. And you can just see how important it is to, again, understand, hey, where's there strength in the market? And things like Tesla and Pulte, the gold miners we covered over the last week. But then you can really go ahead and hedge that portfolio, understanding, hey, I can go ahead and take some short positions, buy some put options, and really make money on both sides of the market. So if crazy sorts of volatility comes into the S&P 500, you're going to be making money really regardless of what happens there. So we see about $11 per share on about a $60 stock, 18% to the downside. You certainly don't want to be long or trying to push long positions in an environment like that. And you see the neural index just continually forecasting just a tremendous amount of weakness over these time periods, with these little bumps when the neural index gets bullish for a day or two, but the overall trend very, very bearish. And you can really see that through a lot of these, like I said, these oil service companies and things like this. Now, moving forward to Legg Mason here. So financials, again, same thing. When you have the tools that can understand that, okay, well, the trend is reversed. As long as that blue line remains above the black line, the trend is up. And you really don't want to let that short-term volatility, bump you out of your position, or else you're going to be, really regretting not being in the market on these huge rallies higher. About a 15% move over just 28 trading days. So literally since the beginning of the year, 15 or 16% on a very reasonably priced stock, about $31 a share. Can easily buy 500, 1,000 shares there. You'll be making a few $1,000s on that single position. Again, with the options, understanding that, look, that's where you want to go in and start buying those call options and take advantage of that upside in the marketplace. but then know how to manage that position. So if the blue line crosses below the black line, you can cut that a trade off and focus on, hey, where are the probabilities? Where is the trend and neural index in my favor? And focus your capital that way. Now, much more recently, we've had some opportunities in really this tech stock HIMX, and I want to go ahead and demonstrate a couple of other features of the software here and how it's so important and can help you really, regardless of your trading strategy, take advantage of this technology here and make better trading decisions, whether you're shorter term, longer term, what have you. But same thing, just a few days ago, you get this blue line crossing above the black line saying, look, the trend is up. Make sure you go ahead and get long this stock. Certainly don't be short. Don't be buying put options. The trend has reversed. You know, so far the market, and I think we've moved up even more today, up almost 30% in about 4 trading days. But what's so really impressive about this software is not only does it let you know, look, what's the overall trend? Where's the short term, that 48-hour forecast? Is that bullish over the next 2 days? But you also even get a predicted high and low value that's generated again via this technology. And you see just how effective this is. If you understand, look, that the trend is up, start buying shares. And additionally, if you get to this predicted low level as a day trader, great opportunity to add more shares. I mean, literally just yesterday, you had a 10% move in the stock as it dipped down to the predicted low, shot higher, and then again, moving up to about 670 today. So maybe in about 15, 20% in just a couple of days there. So, this is why it's so valuable, to have a technology that's consistent, accurate, and really understands how the markets actually perform, because so many other markets can affect and influence and drive the markets that you're trading. And if you don't have a way for accounting for that, it's going to catch you by surprise and really get you in a bad spots and the wrong place at the wrong time, which you definitely don't want. So as always, this has been the Hot Stocks Outlook for February 16th, 2017. Best of luck to you traders out there in the markets. Thank you for watching, and bye for now.